Hello, everyone. All of you can hear me just fine, yeah? Since it's 8, we'll start on time. Let us begin. So yeah, thanks everyone for tuning into our webinar, yeah? We'll be going through the elections, giving you a macro view on the US market post-election. So we'll be touching a bit on the President-elect Trump's policies briefly, ending off with an outlook on what you all can expect and also what you should look out for. Also sort of key pointers to take in mind when you're investing or trading. So a brief overview, let's begin. I'm sure all of you have heard by now that Donald Trump has sort of won the election. His inauguration will be held on the January 20th. So even though he has won now, the previous administration, Biden administration, is still in effect. So this election is quite a resounding victory because he secured key swing states such as Arizona, Pennsylvania, Wisconsin, North Carolina, Nevada, Georgia, and Michigan. So these are states that have historically voted either ways. Yeah. So the presidency is not exactly the only battle that Republicans have to win. Ideally, they would also want to secure a majority in the Senate and also the House of Representatives. If a party can secure all three, then that will make passing legislative measures much more easier. So just a quick recap. The Republican Party has pretty much secured a majority in the Senate with 53 seats. For the House, it seems like they're still counting the votes. So 4 more to go for the House for the Republicans to secure a full majority. So if the House and the Senate are controlled right now, right? Let's say the Republicans is not able to secure a majority, and the House and Senate are controlled by opposing parties respectively. It could lead to a policy gridlock. So what this means, right, is that reaching a consensus on any policies or bills require more time and more cost because each chamber, right, they may try to block or amend the other's proposals. Now, this can have a huge impact on budget spending, and it's just takes a lot of time. Potentially could slow down the process, especially on issues such as tax, tariffs, and immigration, which is what Trump is pushing for. So yeah, I'll let Adria carry on with the macro environment analysis.
Hi everyone, thanks for joining today. Yep. So today I'll just do a quick coverage of the current US macro environment. So just give you some rough tidbits. So now we have come to the month of November, and historically since 1980, good news, November has averaged a 2.1% increase, which is higher than other months. And if you take a look at those years with elections, it actually fared even better, rising by an average of 2.5% since 1980 over the past 11 election years in November. So that is something to take note going into November. Of course, past performance is not indicative of future performance, but this is just some tidbits for everyone. Okay, so as what Matthew has mentioned earlier, we all know that now through the voting, the elected president is Donald Trump. And a lot of people are saying Donald Trump won because of the state of the current US economy. So this brings to mind, is the US economy really very bad? So I have some figures here. In the poll for the voters, there were 31% of voters said that economy was their top issue. And out of these voters that said economy was their top issue, an overwhelming number of them actually voted for Trump versus Kamala Harris. So the ratio is around 79% versus 20%. And also another poll was that 45% of these voters, they said that their family's financial situation was worse today than 4 years ago. So we can see that a lot of these American voters, they are feeling that they are worse off financially today as opposed to a couple of years back. So is the economy really that bad in the US? We can see actually the economy is fine. Just taking a chart from Goldman's, we see that the recession probability, they actually revised it down to 15% this year. Back just last year or year before last, it actually rose all the way past 50%, and the highest was around 65, 66% for Bloomberg consensus. But now, as we come into the tail end of 2024, the recession probability actually has dropped back down back to 15% according to GS. So what is it then that causing all these American voters to say they're feeling worse off, the economy is worse off? That is actually inflation. So over the next few slides, we'll just go through a very broad macro environment to see, is it and explore, is it really the economy, is it faring badly, or is it other issues? Yeah, so the first one is unemployment rate. You can see that now unemployment rate actually has been at all-time lows. This chart actually starting all the way back in 2000, till the end of 2008. So you see after the financial crisis, unemployment actually spiked up, and then later over the years it came back down until we see, as we all know, COVID. There was a very sharp spike up in unemployment, and then now unemployment has recovered and is back towards the lows. So we see unemployment isn't that much of an issue nowadays in the US. And also for real GDP, year-on-year growth. So this is actually a measure of growth for real GDP on year percentage. And we see that, again, real GDP is actually in line with the historical. So there's still growth in the US, which is moderately in line after the COVID crash, and then a spike due to the recovery. Then now it's moderating back in line already. And next is the PCE price index. So PCE's price index stands for the personal consumption expenditure. Basically, it means consumer spending. So we can see from here that consumer spending is actually still quite robust. The initial spike was because after COVID, they cut interest rates, so it prompted a lot of spending. And then now with interest rates suddenly increasing rapidly over the past years, we see that it has tapered down, but still, if you see the chart historically, it's still very much higher or on the higher end. So again, the consumer spending is also quite strong in the US. Okay, and of course, inflation, right? Everybody's talking about inflation. It's been in the headlines quite a while now. And we see that inflation also similarly during the past couple of years, 2022 and 2023, it's actually tapered back down already after the initial COVID supply shortages. And yeah, so we can see that inflation actually is not that much, still a fair ways out. It's 2.4% now as latest, still away from the 2% of the Fed target. Yeah. Okay, next. Okay, this is a very interesting, it's called the Consumer Sentiment Index. Now, Consumer Sentiment Index is actually a survey done by the University of Michigan twice a month, and it shows the state of the US consumers. So a higher MCSI index level, it suggests that the consumers are more optimistic about the economy, which means that they are more positive, they have a more positive outlook about the future economic conditions. And again, if it's lower, it means they are more pessimistic sentiment and shows that they are more concerned about the economy. So you can see very clearly that during COVID 2020 all the way to 2022, the CSI or the Consumer Sentiment Index plummeted a lot, and then it has since recovered as COVID wears down and things get back to more normal. Now, I want to show you something very interesting. If I go to the next slide. Okay, you see that if you compare the inflation rate chart, the one that we see, exactly the same chart we saw earlier, as well as the Consumer Sentiment Index, we see that even though inflation has not say died down, but came much lower, we see the consumer sentiments are not at the same levels as it was previously during Trump's first term back in 2017 and 2021. So you can see the orange shaded area is when Trump was president, and then the blue shaded area is when Biden was president. So we see back then the sentiments were actually way much higher as opposed to where it is currently. So going back to our question, how's the economy and whether is it really worse as what the voters are thinking, or is it just inflation? So important to know is that even though the inflation rate has gone lower, the absolute price level still remains much higher. Doesn't mean that inflation is back lower, means that the prices will drop back down the absolute price level will drop back down. That will be deflationary. So it means that the impact has already been felt by the voters. So the reason why, or maybe one of the reasons why Trump was elected is that because of these higher price levels, that's why people are feeling that the economy is worse off. Yeah. Okay, so now moving on, as Trump returns to the White House, what can he say for the markets? So some of his policies that he has been touting during his campaign is stricter immigration, lower taxes, deregulation, imposing more tariffs, and also, of course, pro-oil and some defense expenditure. Now, if you can see from this slide, this is the US 10-year Treasury note. When this is on the day that the results were announced. When Trump was announced the president-elect, the new president-elect, we see that the 10-year Treasury note actually jumped more than 22 basis points. And this is quite a big move for treasuries, for one-day move, 22 basis points. Meaning to say that the long end of the yield curve is anticipating higher interest rates 10 years down the line. And for this, usually when it reaches to 4.5, still okay, but as if it passes 4.5, moving towards 5, then it will have a bit more concern in the terms of the stock market. But for now, I think the last check is back down to 4.3 already. So for now, we are good. But when we see this increasing, then we can only start getting concerned. But for now, it's fine. Okay, so the first policy that we could cover is stricter immigration. Has a very interesting chart over here. If you can see the orange line, that is the American-born workers. And if you see the gray line, that's actually the foreign-born workers. And up until recently, till end of 2023 and the start of this year, we see that the foreign-born workers actually surpassed the American-born workers. And the foreign-born workers make up 19.5% of all US employees. So with stricter immigration, one of the effects we can see is that with these foreign-born workforce shrinking, it will create some significant workers shortages, some supply-side challenges, and of course, this will cause higher wages and will bring back some inflation. And of course, lower taxes also. One of the main focus here in this slide is basically the GDP constitutes a large portion of personal consumption constitutes a large portion of GDP in the US. This is from the Federal Reserve Economic Data, FRED, so it's directly from the US Bureau itself. We see that on average, the personal consumption make up close to 68% of US GDP. So from this, what can we say? We can see that consumption in the US is quite a major driver of the economy. And so with lower taxes, I think if everybody remember their economic professors, like increases disposable income, both on the corporate side as well as the individual, which will influence and impact more spending. So in the near term, we see that this very pro-business environment, there will be some sectors in the economy or sectors in the market that will do better. So for example, we see that you can consider domestic consumer discretionary names like Amazon, Tesla, Booking, and also if you do want to do stock picking, the ETF is also well also. XLY is the consumer discretionary ETF. Yeah. And the next area where sectors will benefit will be financial stocks such as banks. Deregulation is, again, people believe that under a Trump administration compared to a Biden administration, deregulation is going to be a big thing. They're going to have a more softer approach on supervising banks. So banks tend to benefit from this. Especially earlier, we saw that the long-term rates in the 10-year treasuries in my previous slide was increasing. So banks tend to benefit more for a steeper yield curve. Why? That's a good question. So usually they can tend to lend at a high interest rates and borrow at a lower short-term interest rate. So that's how banks earn their money from their net interest margins, their NIM. Yeah. And another area that I think will benefit as well, based on what its policies are, is also small cap. So usually small cap with deregulation, they tend to perform better because it's easier for mergers and acquisitions. There's less regulations to stop them from being acquired or having mergers. And also, we all know that Trump is very nationalistic in the sense, a lot of protectionist policies. So usually one of the main concerns of smaller companies is their global competition. So with more protectionist measures like tariffs, definitely they will also give a leg up. Okay, so now I'll pass my time back to Matthew, who will expand further on his policies. Thanks, Matthew.
Thanks so much, Adriel, for his analysis, providing quite a comprehensive macro view. So I think for those of you who have watched Trump's campaign, his videos, you may have seen him mentioning tariffs multiple times throughout his campaigns. No matter where he does it, he'll talk about this. Tariffs in general, while it could theoretically increase revenue for the government, it would be highly unlikely without other side effects, such as the increase of prices. Though we believe through our analysis that the extent of increases in prices depends largely on which country it is imposed on, the counterplay by the country, and how high or low the tariffs would be. It is highly likely that the number one tariff recipient that we should be keeping an eye out for would be China. As consumers, I do hope that this potential tariff threat could open up trade negotiations. I believe that's Trump's goal to begin with. It's not the actual tariff itself, but the threat of the tariff that is his goal, his end goal. So Trump is also known to be very pro-oil. He advocated on expansion, heavy deregulation of the fossil fuel industry. He reversed many of the past administration regulations immediately during his first term, and also increase of domestic oil, coal, natural gas to achieve US energy dominance. So the possible outcomes for this, right, is that there could be increased capital spending in energy infrastructure. That could also drive a higher demand for energy-related metals such as uranium, lithium, or silver. So lastly, the defense portion. His stance on wars is pretty clear in that Donald Trump, he wishes for war. He wishes that wars that US had been supporting so far during the past years, such as the ongoing Russia-Ukraine war, the Israel-Palestinian conflict, he wished to withdraw from it. Along with this, he also proposed higher defense spending, which could lead to increased revenue for defense and aerospace stocks with potential spillover for tech stocks. So an increased spending in one area will always lead to a decrease of spending in another. So hence, we could see US facing increased debt and a raise in interest rates if this increase in defense spending is not offset by cuts elsewhere, or rather an increased tax revenue from other areas of the government. Now I'll pass my time to Adriel to give you a bit of investment outlook.
Okay, thanks, Matthew. Yes, so now we are taking a look at what's coming up with Trump as the president. Okay, so no one has a crystal ball for the stock market, that's for sure. And you might be asking, how long will this Trump trade persist? In my view, I don't expect this outsized move to continue. Most likely, it will be a one-time adjustment or a reactionary period to this Trump as a president. So most of the time, market participants will turn back towards fundamentals. And on top of that, any policy changes can take years to trickle down to corporate earnings. So we see from this chart by UBS, in 2025, the expected estimated growth of GDP for the US is around 1.6%. And then if you look forward another year, we see that, let's say the baseline is a divided Congress, like what Matthew alluded on earlier. Or if, let's say, it's a rate sweep where there's a control of both the House and the Senate, again, especially with tariffs for China, we see that it will give some dampening to the US growth. But don't worry, to navigate these headwinds, again, I want to show you the next slide. Okay, so before we go on to dampening, just want to take a look at maybe you might say, oh, Donald Trump is very pro-oil, pro-energy. This is a very interesting thing that I think is good to share. If you see the energy stock performances, this is the chart by Morningstar. It's their US energy index. On the left-hand side, you see an orange and a purple. So the orange one is this is the absolute cumulative total returns during their presidency. So the orange one, we see that the energy in Trump presidency actually detracted 20%, whereas in Biden, it went up 167% total return over their course of their presidency. And also the purple one, which is the relative performance of the overall US market. We see also again in Trump, the energy underperformed the overall US market, whereas in Biden, it overperformed. So doesn't mean that, okay, Trump has a very pro-growth policy, pro-oil policies, energy will perform well. What you think might perform well may not be the case. And on the right side, the chart, we see that in the Trump administration and the Biden administration, the number of crude oil production, measured in number of barrels, is more or less very similar. You can see that. So again, my point I want to drive at is the next slide, which means that doesn't mean whether is it a Republican president or a Democratic president. Historically, elections have made very little differences in the long-term investment returns. So most important is that don't worry too much. You will just have to stick to your investment plan, long-term investment plan, and what is more suitable to your investment objectives. And most important is to stay invested. As you can see from this slide, back in 1933, when Franklin D. Roosevelt took office, if you had just invested $1,000, today it will be worth nearly 22 million if you have just stayed invested all the way. So the point is that doesn't matter we don't have a crystal ball, no matter which president comes in, we will know whether the policies, how will it turn out. But most importantly, stick to your investment plan, long-term investment goal. Talk to your remisiers or your training team to discuss what are your objectives and goals, and we can see a best way to navigate this market.
Thanks, Cyril, for sharing. So yeah, for all of you who are heavily invested in the US market, please, I encourage all of you to go to Donald Trump's website and take a look, read through his agendas, his promises, and you would actually realize, right, that all the promises he makes, right, I don't think it's possible to fulfill them all. So if you would like to stay in the loop, watch the videos, see which are the main ones, and then just stay in the loop, see which promises he makes, and try to keep investors stay updated, keep up with the market trends lah. And I also like to announce that on Poems, actually you all can trade Canada stocks online. You don't have to call in to order. You can do it all fully via Poems. This is our recent launch. If you all have your phone ready, maybe you'd like to take a picture of the most popular trader counters in the Canadian market on Poems. So as you can see, right, these counters, these tickers, they're actually all energy related, which is what the Canadian stock market is sort of known for. They specialize in commodities and also metals, gold, all related to energy generation. So I mean, it's a good alternative if you just want to diversify your currency risk a little bit here and there. So might be worth a look. In addition to Canada market, oh, by the way, please visit this link to find out more about the rates and all that with regards to your account type. And the other markets that we offer, for Asia side, we offer from Singapore all the way up to Vietnam. So please take a look as well. And also on the UK side, the Europe side, we have markets offering from United Kingdom, Belgium, France, Euronext, Germany, Netherlands, Portugal, Lisbon, and Turkey. So yeah, please take a look. And just a reminder that we also offer fractional shares. If there are certain investments or certain tickers you'd like to add to your portfolio, but the cost of one whole share is too much, maybe give fractional trading a try and see how it goes for your portfolio. For those of you who are tuning in who are not yet a Poems customer, maybe scan this QR code and give it a see how it goes. And then you can also call us, email us to if you've got any queries you want to ask us. Lastly, please give our Telegram group a visit. We provide a lot of updates with regards to the products that we offer and also market knowledge in general. So yeah, we'll be putting out webinars quite consistently. If you've got any feedback, things you want us to touch more on, you can also fill in this survey as shown on the screen. Also, here's our contact info, our office address and our phone number. So right now it's the Q&A session. If any of you got any questions, we'll be happy to answer them. Hello, hi, Ting Wei. Thanks so much for your question. So I think the outlook for S-REITs is, I mean, if you are looking for a heavy dividend-based portfolio, it's still worth considering. But since this webinar is on the US market, we can't elaborate much on it because we don't have the information on hand as well. But I think it's Singapore market in general, if you've got a portion of a portfolio dedicated to it, I think it's worth looking into unless you're looking for a capital-based, capital grow sort of a portfolio, then perhaps you might want to look elsewhere. Yeah, thanks.
Hi, yes, I see a lot of questions regards to the recent run in Bitcoin. So yes, this is quite a quick and parabolic move for Bitcoin and cryptocurrency space in general. So again, this is again tied to the belief that Trump is more friendly and has a softer approach to regulation towards cryptocurrencies. So again, as what I mentioned in my presentation, yes, these are all reactionary reactions to Trump being the president. In terms of Bitcoin, I think it has broken the all-time high, so it's broken no more resistance above it. So how high it can go is up to anybody's guess. But the true test comes when Trump is really tested to put in place actual policies and implement them for crypto regulation. So we have to wait and see how this will turn out. So in the meantime, those who are in crypto, enjoy your gains. Again, be cautious, be prudent, and yeah, stay safe in the crypto space. Very volatile. Okay, yes. Hi, Zuan. Okay, that's a very good question. Okay, so this is a few factors affecting US dollar. So number one, higher rate regime will definitely be beneficial in for the dollar in comparison to the other currencies. And one of the tied in terms of stocks, right? Well, number one, a higher rate regime. Previously, I mentioned when Trump got into president, the US Treasury, 10-year US Treasury yield spiked up 22 basis points, closer towards 4.5, 4.6 levels. And then I mentioned earlier that if it goes towards 5%, it will actually signal, or at least the bond market or the treasury market will signal something is happening, something is about. One of the reasons why a higher treasury yield, especially for long-term yield, is I would say not that good for stocks is usually for high yield, it can impact and lower stock valuations. Why? Because cost of capital will increase, making equities less attractive compared to the risk-free returns on the government bonds. So this is something that we have to watch out for, especially with stocks like Tesla, whose stock prices is actually a lot of it is coming from future potential earnings, which can be very impacted by their discounting or their interest rates. So yeah, have to watch out for that. Yes, I see, Isaac. Yes, the US dealing team works during the US trading hours. So now there's no more daylight saving. So when market opens all the way to market close, we'll be there to answer or help you in anything related to your platform and or trading. Okay, before we continue, maybe also under the survey, you can share with us what more topics you'd like to see covered, and anything to that you want to discuss or put in the questions. You can also put in there. Also, we will take our time to review them and also reply them. So don't worry if your questions you see are not answered. We are going through them one by one. Quite a number of questions today.
Hi, Isaac. Yeah, the MMF is mainly the underlying of MMF in general is just a treasury, US treasury for the USD one lah. And then likewise for the Singapore dollar ones, it's our bills and all that lah. So there will be no reinvestment. If you would like to reinvest the returns, perhaps you could cash out and then use it to buy stocks. Because essentially the MMF in your account, right, is as good as cash. You don't need to withdraw, you don't need to do anything. It sits in your account and functions just like cash. Yeah. How to get more units in MMF? So basically, right, this it depends on the value of the fund at the moment when you deposit cash. So there's no way to get more units by buying it. All you got to do is just put in more cash, and then our system will automatically give you the respective units for it lah. Yeah. Thanks for asking the question. Yeah.
Okay, yes, I see a question about view on Coinbase, Mara, Robinhood. So now this kind of especially for Coinbase or Mara, they're very crypto related, heavily linked to the performance of cryptocurrency. So likewise, as mentioned earlier, again with this Trump presidency, we have to really take a close look and follow closely in terms of his policies and regulation towards this crypto space. If it's really what he has promised, then perhaps with a softer regulation, these stocks will continue to perform. However, you must bear in mind that any changes to this could very easily push them back down lower again. So yeah, have to be careful and wary. Yes, I see a question about correction in US market. Yeah. So now after the market has gone up quite a bit over the past few days, it's very strong, very bullish. Whether or not it will continue further or not, as I mentioned earlier, nobody has a crystal ball. But after such a big move, it's quite lower chance that it will continue another 5+% till the end of the year. But will there be a major correction? I don't believe so. Barring any big data news or any big changes in terms of the presidency, most likely it will trend sideways for now.
All right. Seems like there's no more questions anymore. All right. Thanks so much, everyone, for joining. Yeah. Thank you all for your participation, and we look forward to seeing you in the next one. Thank you.